Good day to all of you. I'm Scholar from the Trader 10 community, and today we're going to do an in-depth analysis on Dogecoin. In this in-depth analysis, we're going to look at what the hidden cycle of Doge is, what it will do in the long term, and what it might do in the short term as well. So, please stay tuned, and let's go. When you actually want to start out with trading or investing into Doge, it's very important to first go to as high a time frame as possible to try and get a grasp of what Doge has been doing in the past to try and predict what it might do in the future. There is also this other thing that you need to know before you want to actually start trading or investing into it. We want to go to an exchange who has the biggest data history of Dogecoin. I know most people are actually trading Doge in Binance, but this isn't actually the exchange with the most data history on Doge. So let's go to the exchange with the most history, which is Poloniex. On Poloniex, we can clearly see that there is way more data on the chart as before. Because we have way more data, we will be able to predict the future better, because we can see that Doge is a classical example of a seasonal coin. What do I mean with a seasonal coin? It has periods where it pumps very hard, and then it has periods where it comes back down and tests supports it might have achieved or gained when going up. As you can see, even back in 2017 with the very big bull run of Bitcoin, it also went up all the way to 150-ish to 200 sats. After that, it also came back down all the way to 20 sats. So I ask you, my dear viewers, do you think that this time it might be different? Doesn't this look a little bit already like it's looking right now? By looking at only the higher time frames, we can assume that this time it might not be different. So on the very higher time frame, if this cycle were to continue, where would I actually be interested in Doge again? Well, there will be different levels where I might be willing to look for lower time frame long scalps. So let's point out these levels and let's look how they might line up in the future. So first of all, I'm looking at this zone. From this start right here, going all the way here, because we see that there is a lot of confluence on this level. We see that it was a first time support before we came back down here. It was tested here, here, here. So as you can see, there's a lot of confluence on there. Also, this was a long time support here before we finally broke through and came back down to 20 sets. So I'm especially looking for it to come back down to 50. And if it comes back down to 50, I might be willing to buy it. Of course, getting into it lower from 28, I will be also interested in buying it, or maybe even 30. But the lower zones, I have a different plan down here. So I will explain this plan to you as well. But let's first talk about the more scalpish trades and what Doge may not lose if we want to continue our trend up. So looking at this, I'm also interested in this high right here where we are currently bouncing. Now, if we want to look at more local time frame, more in terms of scalps or not on the weekly chart, then we can always go to the daily and start looking for confluence on levels. Sadly enough, I was one day too late to post this video because Doge actually made a very decent buy, had a decent buy pattern right here. This is called a higher low because this is what started the move up. So, right, this was a retracement right here, and this was the higher low of this move, of this retracement. So we most of the time call this a start of the move. Now, this thing here ignited us to the upside. So now when we come back down, we will assume that this will have become support, this resistance right here. So that's what we're assuming. Now, does that mean that it won't come there again? Yeah, well, sure, it can come there again. But I'm expecting this to be some kind of big support. after testing support, we're probably going to test the resistance. Now what's going to be the first resistance that we see? It's going to be the first blue candle that we're actually seeing. It's this one. So I'm actually anticipating Doge to make a new move to the upside to at least 140. Why am I saying 140? Because on these lower set coins we are always looking to front run our own PTs. That's the reason why I'm saying 140 instead of 148. Because we always try to front run on these low set coins, because if you look at it, the percentile that you make on these are very high. Be careful, you can also lose a lot of money. Then again guys, remember, this is non-financial advice, we're just teaching you guys how to read a chart like Doge. So this is kind of everything that I want to tell you guys for now about Doge on the lower time frame. So let's head back to the bigger time frame, because it's not really a necessity to trade Doge below the daily time frame, because the dailies will be respected by a lot and you will grab the bigger moves thanks to the daily. We don't try to catch every 1% or every ticket moves. We try to catch the big moves. So if you want to catch the big moves, then I would suggest you look a little bit further into the video and see what I'm going to explain to you right now. So when we go back to the weekly, let's say that the same happens that happened in the past right here. Let's say that Doge will come back down all the way to 30, 40-ish sets. What's my plan then, and how am I really thinking to trade this? So with the same methodology as I said here before, I'm actually going to look at the 31 all the way to 23 set coins. In this zone, I'm going to be looking to actually DCA my entry. What do I mean by that? At each tick, at each set of the price, I'm going to put a buying order. But every buying order is going to be at least 20% bigger than the previous one. That way, the lower Dogecoin goes, the bigger my position gets. And then I will anticipate this to break out back to the upside. Now, of course, you have to ask yourself, how do I manage my risk on this? Well, it's kind of simple. Let's say you want to risk 1% on this trade, right? Then you just calculate, okay, if I were to play this without a stop loss, how much is 1 or 2% of my portfolio size? That's the amount that you will DCA in total, right? And that's how you will manage your risk on such a coin like this, on Doge, when you're DCAing down. Why am I saying that you have to put your 1 to 2% risk in there? It is because we will highly likely be playing this without a stop loss. That way, even if price gets below here, we can still anticipate a move up and then try to leave our position if needed, if our plan isn't working out. But I will probably keep on DCAing as far as it goes down, in anticipation that of course Doge will do the same thing as it did before, and if it doesn't work out anymore, then I only lost 1 to 2% of my main account, which is the most important thing in trading. It's risk management, right? So that's kind of my plan for the upcoming weeks for Doge, because this can really take some time. Let's look back at 2017. How long did it actually take for Doge to blast off again after coming back down to 20 sets? It took them almost 200 days. So if you're really serious about this and if you're in it for the long term, try to keep this video in mind whenever you look at Doge again. Doge, in my opinion, is a seasonal coin. Because it is a seasonal coin, we have to play it as a seasonal coin. So don't try to catch every dip, try to be smart and try to catch the dip. Thank you all for watching. I'm Scholar from the Trader 10 community. I hope you really liked the video. If you liked it, please give us a sub or a thumbs up. It really helps us. So thank you very much for watching, and I hope to see you Friday on our weekend forecast. Bye bye.